Hello, Sam. Thank you so much for joining us today on the Beyond Insurance podcast. Now, I and Scott and the Beyond Insurance team have known you for a little while, but I know there might be a lot of people out there who do not know the infamous Sam Friedman. So, for those that may not know who you are and who you work for, could you just, give us a little bit of background on what you do for the industry?
Sure. Well, for the last 10 years now, I can't believe it's been that long, I've been the insurance research leader at the Deloitte Center for Financial Services. So we do a lot of consumer research, both personal and commercial lines. We also do research about how folks in the industry are helping, to adapt to the new reality, whether through innovation, business transformation, cybersecurity, new product development, actuarial issues, regulatory issues, et cetera.
Hmm.
Before that, for many years, I was the editor-in-chief of National Underwriter, and that's where I met your boss, Scott Addis. We ran a Insurance Agent of the Year award program, and Scott won one year. And I don't remember how many years ago it was, but it was quite a while. And I'll never forget, because I did the profile for the award program, what my first sentence was of his profile. And it was, how could National Underwriter choose as its insurance agent of the year someone who claims not to sell insurance for a living? And I said, that really captures Scott Addis. We talked all about, how his Addis group focused on risk management, how they would not quote business that just walked in the door and just asked them for a price shop, and how he turned that philosophy into not only a successful agency business, but went on to found Beyond Insurance, based in part, I think, on some of the publicity he got with us, because of our profile. We introduced him at the Big I conference and such. He started getting a lot of calls from agents looking for help. He did a lot of it pro bono. And then I think he realized, hey, I can actually help people and maybe make a living at that
Hmm.
instead of insurance. So now he's sort of enjoyed the best of both worlds. And I think this is my third or fourth time working with you guys on various podcasts and stuff. So always
Yep.
happy to stay associated with you.
Yeah, no, you've always been a great friend to Scott and through Scott, the Beyond Insurance team as well. So we're really excited to have you here. You mentioned something earlier when you spoke about your experience at Deloitte, and one of those areas of expertise relates to cyber risks, exposures. And when you and I began speaking about this conversation, you highlighted that Deloitte recently did some research on cyber risks, consumers actually purchasing the coverages, things like that. Can you open up a little bit and give some context into that type of research that you went through?
Sure. What we did in this case is, we were sort of alarmed to see the numbers on cyber insurance sales. It wasn't that long ago that we saw these very bullish predictions of maybe $20 billion or more in premiums written in the next few years, like by 2022, 2023. We are nowhere near close to that, actually. In fact, if you look at the numbers, it's pretty paltry. It's still a very much a niche market
Hmm.
to the extreme, and the growth rate has been pretty strong in some ways, but off a very small base. Like for instance, 2015 it was $883 million in premiums, and a little more than half of that was standalone coverage, with the rest through standard policies,
Hmm.
cyber dedicated premiums through regular policies. It jumped a bit over the course of the next few years, but even now it's less than $2 billion in annual sales. We haven't gotten the full year figures yet for 2019, so it was about 1.9 billion for 2018. And so it's best guess, maybe it's 2.2, 2.3 billion. And again, a substantial amount of that, maybe 40%, is premiums that are allocated to cyber risk within standard property, liability, D&O, and other related run-of-the-mill
Hmm.
policies. And the only reason you're really seeing that is because the regulators started requesting that insurers to account for this risk, because there was some alarm that insurers were just tossing cyber coverage into standard policies as
Hmm.
a way to retain business, but at the same time almost like giving the coverage away. There wasn't much additional premium being charged for it. So the regulators start saying, I need you to filter out how much are you allocating of this total premium for this. So, we think that a lot of the growth, the so-called growth in cyber premiums, is really reflective of just insurers adding the coverage to standard policies. Standalone itself is just over $1 billion. So we're quite a ways from a $25 billion market, right?
That's wild.
So we said, how is this possible? You would think that this is a slam dunk sale.
Mm-hmm.
Read every single day about the latest major cyber breach or ransomware attack, whatever the case may be, right? So why isn't everybody buying cyber insurance? You would think agents would have to fight people off with sticks for this, right? Not really the case, unfortunately. And that's why we did this research. And we focused on the middle market. And by middle market buyers, I just want to set expectations here because definitions are all over the place.
Mm-hmm.
We're really talking about folks with over $250 million in annual revenue, but under $1 billion.
Okay.
So we're not talking about, the gigantic Fortune 500 companies, and we're not talking about the mom and pop businesses on Main Street. 250 million is a pretty substantially sized business. $1 billion certainly is, but that market's surprisingly underinsured when it comes to cyber.
Mm-hmm.
So we said these are frequently people that have risk managers, so perhaps they should know better. Certainly they should be a more educated buyer than your average Main Street business. And a lot of times Main Street businesses, they don't have the sophistication or the resources to buy separate policies. They just need it added to their standard coverage somehow.
Mm-hmm.
But we thought that the middle market would be, a major player here, very, very underrepresented. We looked at both buyers of standalone coverage, and by standalone, I mean a dedicated cyber insurance policy whose entire limits are dedicated to that risk. It's not mixed up with anything else, right? So we looked at buyers of that. We looked at people who do not have standalone. We looked at folks that have both standalone and coverage in their standard coverages, their standard policies, and people who have, only one or the other. I only have standard, or I don't have anything at all, right?
Mm-hmm.
And we looked at 5 different industries: manufacturing, energy, healthcare, retail, and financial services, to get a bit of a representative spread.
Mm-hmm.
So that's a little bit about the research itself. I guess we can now get into some of the details. I'll let you go on with the questions.
It's amazing to me because when we think about the world of cyber and the things that Beyond Insurance focuses on when it comes to cyber related issues is there is the policy itself, but understanding who is most vulnerable to cyber attacks. And I think in the headlines, we see every once in a while, or, more frequently now, these large organizations that are getting hit with a cyber attack. But based off of our knowledge and trainings that we give through certifications and education we give to our network of agencies, we've come to learn that the ones that are actually most vulnerable are these middle market and small business owners, because they don't have those teams of cyber experts that are fighting against these hackers and ransomware people. So it's almost more critical, which is strange when you acknowledge that they're not receptive to this type of coverage because they're more exposed to this. And as you said, even if they have a risk manager on staff, it seems like they're turning a blind eye to this. So what do you think is the problem? Why do you think cyber insurers are really struggling to gain this traction that's needed to address this very critical exposure?
Well, it's funny. We got most of that information from the non-buyers, obviously. Like, we did ask them pretty directly, like, what has kept you from buying a standalone, or from having a standalone policy, I should say, right? There were some major issues with the product itself, starting with price. We hear this all the time. I know Beyond Insurance, you guys are the cream of the crop. You are professional risk managers in your own right, right? You're risk architects, right?
Yes.
I think that's the turn of phrase, which I love.
I love it.
And so I may be preaching to the choir here, but it won't surprise you guys to learn that cost was the number one issue.
Mm-hmm.
41% said the cost was too high. That's why they don't have it. And frankly, I don't want to make fun of the buyers. I appreciate where they're coming from.
Mm-hmm.
And the idea is, too, that a standalone policy is an additional policy. What we heard from some of these people, because we did some qualitative interviews as well, not just check the box surveys.
Mm-hmm.
And a lot of them told us, you know what, I have a budget for insurance, right? And every year we deal with renewals. I try to keep the cost under control. It's been going up lately, but I don't have unlimited resources to buy insurance. And you're asking me to buy an entirely new policy for something I think should be insured through something I already have, and it's going to cost me additional dollars right off the top. It's not a matter of, well, we're getting a 5% increase or we can offset it with the deductible. You're giving me something new that I have to spend more on. I'm going to have to go to my CFO. I'm going to have to go to my board and say, I need more money for this. And they're going to tell me, what? Your agent is just trying to sell you more insurance, right? That's too much. That's too much money, right?
Mm-hmm.
But in fact, when you really dig down a little deeper, a lot of them were complaining that the coverage limits were kind of low in their consideration for what they were paying. So they didn't see value. It's like, I'm paying a decent premium and I don't see if this is really going to cover my exposure to any great extent, more so than maybe I set aside my own rainy day fund in case I get hit, right?
Mm-hmm.
Now here's where it gets a little dicey. 1/3 of them said that they had a standalone policy at one time, but didn't renew it. And we will get into the reasons behind that. So it's hard enough to sell these people on cyber insurance. So some of you guys may have sold them,
Mm-hmm.
and you can't take retention for granted. Some of them walked away. They said, you know what, this isn't worth it. And I'll go into some of the details why that is.
Mm-hmm.
Some of them felt the coverage terms and limits were just too restrictive. That goes to the value equation too. And some of them said the coverage and terms were unclear. That was a big factor, right? Especially because there's no standardization yet in the standalone market. So if you were to show me as a buyer 3 separate company standalone policies, very hard to do apple to apple comparisons, even if I know you guys don't like to sell on price, but I don't get it. Like, some of them cover ransomware and some of them don't. Or some of them set separate limits for ransomware versus data breaches. Or my head is starting to hurt. I mean, can't you just show me a cyber policy and tell me which is the best one to buy at the right price? It's just there's too many moving parts here,
Mm-hmm.
right? But
Sam,
let me. Oh, go
just a
ahead. Sure.
quick question with that. Where do you think that the breakdown is? And obviously, you're not comparing policies, and I'm sure it will vary depending on carrier and coverages and things like that. But do you think that the breakdown is between the underwriters struggling to educate the agent on the coverages that are within the policy, or do you think it's the agent's inability to then translate that information appropriately to the insured? Or do you think it's a little bit, do you think everyone takes a little bit of ownership in this?
I think it's a little bit of both. And I think over the course of this podcast, we'll explore a little bit of this in detail. I'd like to go into both. In fact, with the next point, I'd like to go into that about where the agent fits into this too. But one of the big problems going into this is that this is a moving target for the underwriter.
Mm-hmm.
Usually insurers and their actuaries, they underwrite from the rearview mirror. What is the loss history? Like, you talk about property catastrophe. I know the history of hurricanes going back 100 years in this county. Of course, global warming and climate change, that may be changing things a bit. But I have a pretty good idea that, where you're going to see flooding, where you're going to see hurricanes, where you're going to see wildfires. I get it, right? Cyber risk can hit anybody, anywhere, at any time. It more resembles terrorism than it does, the natural disasters.
Wow.
But unlike terrorism, God forbid there's a terrorism event, it's usually limited to a specific location.
Mm-hmm.
Whereas, God forbid, a cloud system is breached, it's going to affect the world.
Mm-hmm.
It's actually maybe even closer to the pandemic we're dealing with now. If you have a major cascading effect, a cyber attack, it affects everybody. So how do I price this? Plus, you have threat actors out there that are constantly coming up with new ways of penetrating your systems, new ways to get at you, new ways to hold you liable. This is where ransomware has exploded, right? And now you have millions of people working remotely during the pandemic who never did so before. I don't know if all these home computers are secure. Can I get them secure? So for asking an underwriter who's used to looking in the rearview mirror to all of a sudden look at not just a microscope, that's what's right in front of him, but a telescope, what could be coming down the pike, it's scary. So they
Hmm.
tend to be much more conservative. They tend to price much more conservatively. And in fact, we see that the coverage has been quite profitable. Why is that? Well, it's because they're building in likely an extra margin, because I don't know exactly how much exposure I'm taking on here.
Hmm. That makes
So
sense.
that puts the agent in a bad spot.
Hmm. Now,
Right?
before we jump into the agent and that portion, and I'm glad that you brought up, working remote and COVID. Obviously, you're at home. I'm at
My
home.
kitchen in Sheepshead Bay, guys.
Exactly.
Welcome.
As we were talking, I'm in my kitchen as well as we have this conversation. And I know that there are, probably millions of people that are sitting at home using their home Wi-Fi or potentially using some sort of public access Wi-Fi, which then increases the exposures, especially as states continue to open up. And I think almost every state at this point is at some level of flexibility when it comes to reopening safely. So let's talk about the organizations that have purchased like the standalone coverage, right? So they made a deliberate decision that cyber insurance is something that they want to take on to transfer that risk. So what can we as an industry learn from those buyers?
Well, the first thing you're going to learn, and I guess this can be said about a lot of insurance issues, and it's unfortunate but true. Fear is a big factor in getting people to buy insurance. If people are actually afraid of losing things, money, property, injuries to people or customers, they tend to be much more attuned to buying insurance. And when we asked them, why did your company purchase a standalone policy? What was the tipping point? It was all about fear. It was the number one reason was a reaction to cyber attacks against either people in their own industry or other industries. It's like,
Wow.
uh-oh, what if that happens to me, right? Uh, it was also, a lot of them said they were reacting to one of their supply chain people being hit. Even, reading about it in the media tended to scare people. So that leads into one of the to-dos that we urge for insurers and agents, and that's the very effective use of case studies,
Hmm.
specifically involving the target prospect. So if you're dealing with a manufacturer, you want to go in there with a number of case studies about ransomware attacks, security breaches, the stoppage of operation attacks where manufacturers were hit, preferably if you can find them in their own industry. If they're in auto parts, find an auto parts person. Because it's the idea that we found that those who, among the non-buyers, the most likely uh, reason not to buy is this didn't happen to me.
Hmm.
I think I've got this locked down. Well, nobody has this locked down. Not the government, not private business, not individuals, right?
Hmm.
So how do you convince someone who feels that I've got this, that maybe they don't? Well, you show them their competitors maybe went down with this. You show them similar industries, but other segments may have been hit with this, or you just hit them with general stories if nothing else works. And what was the aftermath for those that didn't have insurance? What kind of expenses were involved?
Hmm.
How big was it? What was the reputational damage? Um, how in the world did the insurer help? Did they provide me extra services to get me through this, right? And that's another story we'll talk about in a moment about how you can do this. But a big factor beyond fear, right? We found this fascinating. 40% said they decided to buy, and you guys in Beyond Insurance will love this. They decided to buy because it was recommended as part of an independent company's cybersecurity risk assessment. Now, why
Wow.
is that? It's because they think quite commonly that an insurance company or an insurance agent is out to sell them things. And the more they sell, the more money they make. So it goes back to what I said earlier about the additional policy. Well, you're going to break my budget here, right? But if I hire, a totally independent consultant who looks at this and says, I think you're vulnerable here, here, and here, and financially we can get you, maybe with a self-insurance fund to this point, but you really need to buy some insurance. You need to transfer some of this risk. So if you're selling cyber insurance as part of a more comprehensive risk management package, if you approach this holistically, as a risk manager, as a risk architect,
Hmm.
as opposed to a price shopping policy peddler, you're going to have a lot better chance of selling people. And when we went to the non-buyers and asked them what might convince them to go ahead and finally make a purchase, and we gave this as one of the options, a recommendation of an independent security consultant, they took it. It was like 1/3 said, yeah, I think that might put me over. So if all you're doing is coming in and saying, I've got this policy, I think really your existing property and liability policy won't cut it. I think you need an additional coverage here. And they're like rolling their eyes and they're saying, oh, I got to go back to my board now. Say, look, let me take the beyond insurance approach. Let me get somebody in here to assess what you're up against. If you haven't already done this, you guys may already be doing this as part of your broader risk management service. But let me specifically get into your cyber vulnerabilities. And then once I point out where you're vulnerable and how we can shore this up from a loss controls perspective, let me talk to you about the fact that no matter how invulnerable you think you are, we're all vulnerable. So how do we transfer some of this risk, and why does that make sense for you?
Hmm.
That was a big deal.
Yeah, and that makes sense. When I think about how we work with the Beyond Insurance global network agencies, we try and tackle this issue head on in a bit of a two-pronged approach. One is looking at like the IT infrastructure, and we have a few strategic partnerships with companies like Corvus who have their own IT audit, which then translates into a very affordable policy. So you can actually put a number to that as well. But we are also exploring opportunities to provide training to employees for things like phishing and scam emails, things like that. So I think agencies really tackle it in those two different areas. So I'm glad that you're saying this, because I do think that this area, there is so much available. And I've even heard of some carriers offering, phishing training as well as part of their experience for risk management protocols. I think there's so much available out in the marketplace that you can tap into as an agent who's really trying to provide some sort of an assessment to quantify this risk as opposed to coming in and trying to sell a policy. So I'm really glad that you're highlighting that.
Now, there's one thing I did want to bring up.
Definitely.
I don't think it is relevant directly to your audience because I think you guys know better than this. Okay. But I won't assume. Okay.
Yeah.
We asked the non-buyers why they didn't buy.
Hmm.
Right. And there were distribution issues. This really threw us for a loop. 1 in 5 said their agent or broker never suggested it to them. Never
Wow.
suggested it to them. Okay. Gets worse. 1 in 5 said their agent or broker advised against buying a standalone policy. So we asked, why that is, why did they advise against it? And essentially a number of them were saying they were raising many of the same issues that the buyers were independently, that I don't think you're getting good value for what you're paying in terms of the limits. I think the coverage restrictions are so difficult to overcome in some cases. It's going to be really hard to get a claim paid here or, get it paid quickly. There was a situation where it's going to be very hard for me to shop for you for this because there's no standardization.
Wow.
And also because all they're selling you is risk transfer. Maybe we can do something better than that. Maybe it's better that we can get you a self-insurance fund. Maybe we focus more, we invest that money that you'd give to a premium more in your risk management program. There are other things we might be able to do, right? And then there was one other element I thought was kind of lame, to be honest with you, but this is on the agent.
Hmm.
I'm sorry. They said, my current insurer doesn't offer standalone insurance. Okay, so
Wow.
I'm sure that a good agent or broker could find a company that does,
Hmm.
especially if you're an independent, right?
Wow.
So
Like
that's,
excuses.
would you guys agree with me? That's on the agent and broker. If they say I didn't
Absolutely.
buy it because my company doesn't offer it. These,
Yeah.
these are $250 million to $1 billion companies,
Hmm.
not like, Sam Shoe Shop on the corner, right? I'd let Sam Shoe Shop get away with an answer like that, but not someone with a risk manager. It's
Yeah.
like, you can find it if you want it, right?
Unbelievable.
So that's not good. So what we were telling the insurance companies in the report that we published is that, hey guys, before you worry about selling policyholders about buying this coverage, you've got to convince your own distribution force
Mm-hmm.
that this is a necessary product that makes a lot of sense, that offers a lot of value, that will be handled in a claims situation in a prompt and satisfactory fashion. Because a lot of them that had it and then dropped it, 1/3 said it was because they had problems with their claims.
Mm-hmm.
So when the moment that mattered, I bought it. I wasn't sure about it. My agent convinced me about it. I bought the damn thing. And then I had a claim and it took forever to get paid or it didn't get paid at all. The heck with it. I'm not
Mm-hmm.
renewing it. Wasn't worth it. We don't need that kind of publicity, right? So
Absolutely.
that's on the insurer a little bit. And it's also maybe in some cases, I don't want to put all the blame on the insurer's shoulder. Perhaps, what we found is a lot of agents and brokers, I'm not suggesting your crowd in this case, but a lot of them are not well educated about cyber risk, even in their own businesses.
Absolutely.
And they have a hard time articulating exactly, what the risks are for their clients and how cyber insurance as a standalone supplement or replace what's going on. They very limited coverage if it exists at all in standard policies. And that's on the insurers to try to educate not only their buyers, but their distribution force and to produce a product that lives up to everybody's expectations.
Absolutely. So I want to address a couple things that you said, because while it is disheartening to hear some of those statistics on things as simple as, well, my agent didn't even, bring up that subject. I want to almost flip it to look at this from an opportunistic position, right? Because while it is eye-opening to be aware that these issues happen, I think we can look at this and say, all right, well, if 1 in 5 agents are not even bringing up the idea of cyber, that in and of itself becomes an opportunity from a sales perspective when we're thinking about how we can prospect and add value to a customer, educating that customer that, that 20% of customer segment that hasn't even had the opportunity to have a conversation about cyber. So that's one thing. The next is when it comes to, you're just transferring the risk, and it's a very complex process. While I know I cannot speak for the insurers and how complex the claims processes should one occur, I am aware that the coverage typically through a cyber policy, well, many people, I personally did not know until we actually went through our own Beyond Insurance training on this,
Ah,
is how much a cyber policy actually covers, and how much you actually have to do if there is a breach and you do lose client information. It becomes private client information becomes public, and it covers so much more than just lost funds. Let's say, should someone ransomware you. So there's a lot of meat in coverages, and so for someone to say, oh, it's just risk transfer and it's just the claims process and it really doesn't cover that much, unfortunately feels like a lack of education on the agent's part, or as you said, perhaps it's the insured not fully educating the agent on how to actually administer or broach the topic of cyber. So I think those are two opportunities that agents could take advantage of, because there is material out there that you can begin to learn about that information. For sure.
Excellent. Good points.
We have about 10 minutes left, and I want to hit 3 more key questions. We spoke a little bit about I want to tackle underwriters and agents as 2 separate questions. We spoke a little bit about the underwriters. So I'm curious if you have any other thoughts on, from a carrier perspective, what could they possibly be doing to expand their footprint in the middle market space? Do you have any additional insights? I know you touched on it a little bit ago.
Sure. So, there's a number of steps they could take, really. First of all, since cost is such an issue, I think they have to work a little harder on making the price right for buyers. And there's all sorts of new data repositories coming out now, because that was one of the problems. A lot of these attacks go unreported, so we don't have the kind of huge database that you would in auto insurance or in property catastrophe, right? You could certainly do a better job maybe writing by industry classification. Obviously some industries like healthcare with all the personally identifiable information, and and others are more risky than others, and just price accordingly and make sure that that you're doing right by the buyer there. And, again, raising the premium incentives for loss control is essential.
Mhm.
If you do right, like almost giving like a classification by cybersecurity maturity, how good are they at doing this? And reward them for taking steps to limit the risk. This is in everybody's best interest, right? The other thing is to upgrade the value proposition. This is what we talked about, and make standalone, rather than just a price sale, the centerpiece of a broader risk management program. That's a big deal. You want to add services to support that. The broker or agent can certainly do that as well, such as the independent cybersecurity assessment we talked about. And the claims experience. Obviously, if 1/3 of the people who had it weren't happy, that's kind of high. So we
Mhm.
want to get away from that. Um, you want to educate buyers better as well as your distribution force. And that's important, is to really strengthen the agent's hand in this. Provide much more evidence of standalone value, which right now there's a lot of skepticism out there. You want to bolster sales incentives. Maybe it's a higher first year commission for
Mhm.
brokers on cyber, because you're asking them to essentially, even though it's been around a while, it's obviously such a niche, and there's so many people who don't have it. I consider it still a groundbreaking type coverage. So maybe you give the broker a little bit more of an incentive, and maybe for the first year and the first year renewal, you get a little higher commission than you would normally.
Mhm.
Don't make it a routine thing. And most importantly, raise awareness for agents and brokers of the errors and omission exposure. You guys out there, some of you may be old enough to remember Superstorm Sandy, right? That hit the East Coast. And what happened? A lot of small businesses found out that their business interruption coverage, or their property insurance, didn't include flood.
Mhm.
Ah! So who did they sue? They sued the agent. You never told me I needed flood insurance. Well, there was never a flood here in 100 years. You didn't tell me about flood insurance. It's
Mhm.
your fault, right? So that was a 1 in 100 year storm, let's hope. Cyber, there's no such thing as 1 in 100 year events. There's 1 in maybe 100 minute events, right?
Mhm.
So we know that cyber attacks happen all the time. If you, as an agent and broker, haven't adequately informed your client of the risk and of the options available to them to contain and transfer it, and they get hit, those 20% that said my agent or broker never suggested it, if they get hit, they may say, let's sue the agent, man. He never brought this up. I never knew I needed this. What do you mean cyber insurance?
Mhm.
I thought it was in my property policy. Now they're telling me it's excluded, or it's going to eat up all my limits. I mean, what is going on, right? So that's where the insurers can really make a mark.
Mhm. Yeah, and actually, even um, not necessarily directly related to that, but I think about when you talk about Sandy, what's happening with COVID now. I think so many people are trying to figure out, what type of coverages they have, where they covered, things like that, and uh, I think that the same approach would have been taken if carriers began to sort of begin covering these pandemic issues, right? Or if people got sick on the job, or business interruption coverage. So it's giving me almost like current, you know, current reminiscent of what we've seen in the industry, and just whispers within the industry with how COVID's been in, responded to in terms from the carrier perspective, the agent perspective, as well as the consumer. Now let's switch gears now and talk about the agent. So when we look at the risk architects and the risk consultants out there, what can they be doing today or what can they do to start getting these cyber coverage sales off the ground?
Well, it's an educated buyer is your best customer. I know that
Mhm.
was an old clothing retailer here in the New York area used to advertise that. It holds true for insurance, and you guys know this. I mean, your best bet is to lay the groundwork by making sure that your clients are fully aware of the risk, uh, helping them identify their specific exposures. Don't make it like you can start generically, but let's get granular. What exactly does this mean to you? If you guys think that I'm pitching this as some scheme to sell you more insurance, we can arrange for an independent company that gets no commission off any sales or anything like that, and they can come in and do an independent cyber risk assessment. I think it's probably long overdue anyway. And together we can work on how to address those issues. I can arrange services for you. We can work with your insurer to do so. And, we believe that, a sound, holistic risk management program for cyber will always include some element of risk transfer, because you can never totally contain this risk.
Mm-hmm.
We're learning that you name a company and say they're never going to have a breach, they're never going to be held ransomware. It's just really unrealistic to think like
Mm-hmm.
that. But on the other hand, I don't want it to come across as I'm just pitching more insurance. So let's work as we always do with the Beyond Insurance customers on risk management as an art and a science, of which insurance is a component, and a very important one. And that's where you really start from there. And from there, it's important, as I said, to have actual examples of what you want to do, case studies and such. What's the worst that can happen to me? Well, where do I start? And here's evidence. I'm not making this stuff up. Here's direct evidence of this. And this is also, it starts with educating yourself. How good is your own cyber insurance and cybersecurity program? Can you go to your client, and what if your client said to you, well, what are you doing with your insurance brokerage? Do you have cyber insurance? Who handles your cybersecurity?
Mm-hmm.
So walk the walk, don't just talk the talk. And I think you'll be better off, and feel free to use yourself as an example. If I have this coverage, I wouldn't think of doing without it. If you don't have cyber insurance, you got to ask yourself why, and how do you explain to your client that they need it and you don't,
Mm-hmm.
with all the information that you have that's personal and private.
Mm-hmm. No, that makes complete sense. So I want to acknowledge you and say thank you so much for sharing so much wisdom. I mean, you've given us sales recommendations, you've given us the statistics, you've given us the insights from the consumer's perspective, the agent, as well as the underwriter. I have one last question for you. And I like to ask this of all of my guests. Someone listening today, if this resonated with them, and they could really be any part in the industry. So it might be a kind of a big question to answer, whether they're an agent, a wholesaler, an underwriter, right, in claims. If someone's listening today, what is one thing that they can do to be better prepared tomorrow for the opportunities and the challenges that come with cyber exposures and coverages? Like, what should they do if they feel inspired by your words so that they can get better aligned with this type of problem?
Well, I think the best lesson that we've learned through all of this is that it's a huge misconception to think that you already have this covered with your standard policies. So your buyers, they may be, some of them, sophisticated risk managers. In some cases, maybe not. You're
Mm-hmm.
their risk managers. And when you go through this exercise, what you need to do first is go through their policies. Make sure, first of all, that cyber is specifically named in the policy. There have been lawsuits about so-called silent coverage where, well, they didn't exclude it explicitly, so it must be included, right? We don't want to get into that, right? You don't want your clients to have to go to court. So before you have any of these conversations, be aware that there's going to be skepticism. They're going to think they already have it covered. You're just trying to sell me extra stuff. And be prepared to go in there with a yellow highlighter and say, I want to go through your coverages, not just for a normal renewal, but I'm going to show you that the word cyber doesn't appear in your policy. So we're likely going to have to fight this out in court. Or if it is there, look at the limit you're getting. And
Mm-hmm.
it's mixed in with everything else. Why not add on a coverage that is going to protect you? And use the example of what happened in other niche markets, like directors and officers liability, employment practices liability, pollution, environmental protection, right? Environmental impairment liability. All these coverages are sort of routine today, right? But they're all standalone. And they used to be just considered thrown in with the rest of the stuff, but they became such a hazard that it made sense to spin them off. And what public company today would not have D&O insurance? You'd have to
Mm-hmm.
be insane, right? Or some sort of a D&O platform to cover you. It's the same with cyber. People just don't realize the risk yet. So that's the two suggestions I'd have is, study the standard policies, show where the gaps are, show where cyber can fit in best, and explain to the folks that, would you consider not having D&O if you have a board of directors? Or would you consider not having employment practices liability with everything going on in the world today? Probably not. So why would you not have cyber insurance knowing that every day somebody is hacked?
Hmm. Yeah, no, that's great. Sam, thank you so much again for joining us today. If someone wants to learn more about you, what's the best way for them to connect with you?
Well, you can always find me at Deloitte. It's pretty simple. Sam Friedman, SamFriedman at Deloitte.com. And you can find me on LinkedIn. Please link up with me. I post all my research and various other thoughts there. And you can always find me through Scott Addis and Beyond Insurance.
Absolutely. Well, Sam, thank you again for joining us today, and we appreciate your insights.
Thanks so much for having me. Take care and good luck out there, guys.
Thank you.